two brothers, one revolutionary idea, and a banking war that destroyed them both. The Pereire brothers built a financial empire worth $18 billion in today's money. They challenged the Rothschilds, the most powerful banking family in history, and nearly won. Émile and Isaac Pereire invented the modern investment bank. They pioneered using public savings to fund railways, cities, and industrial empires. They made thousands of middle-class investors wealthy beyond imagination. The crash came in 1867. The Crédit Mobilier, once worth 300 million francs, became worthless overnight. Investors lost everything. The brothers were ruined, humiliated, and forgotten. Today, nobody remembers their names. But every investment bank exists because of what they created, and the Rothschilds helped destroy. This is their story. On November 18th, 1852, a new bank opened at 12 Rue de la Chaussée d'Antin in Paris. The name above the entrance read, Société Générale du Crédit Mobilier. Inside, two brothers, Émile and Isaac Pereire, prepared to revolutionize European finance. Their bank operated on a radical principle: use money from ordinary investors to fund extraordinary projects, railways, gas companies, real estate developments, industrial corporations. Instead of lending cautiously like traditional banks, the Crédit Mobilier would invest aggressively, taking equity stakes in companies and profiting from their growth. Within 5 years, the Crédit Mobilier controlled assets worth 600 million francs. That's roughly $9 billion today. The bank financed 3,000 miles of railway across France, Spain, and Austria. It funded the reconstruction of Paris under Napoleon III. It owned hotels, steamship lines, insurance companies, and gas utilities across Europe. The Pereires weren't aristocrats. They were Sephardic Jews from Bordeaux whose grandfather had been a small merchant. They'd started as financial journalists, writing about economic reform and industrial progress. They had no inherited wealth, no political connections, no banking pedigree. What they had was vision. They believed railways would transform Europe the way canals had transformed England. They believed middle-class savings, properly mobilized, could fund industrial revolution. And they believed the old banking establishment, particularly the Rothschild family, was blocking progress through conservative lending and monopolistic control. The Rothschilds had dominated European finance for 50 years. They'd financed governments, funded wars, and accumulated wealth that made kings jealous. They operated through private capital, family connections, and political influence. The Pereires wanted to replace that system entirely. And for 15 years they almost succeeded. Jacob Rodriguez Pereire died in 1780, decades before his great-grandsons would challenge European banking. He was a linguist, educator, and innovator who developed the first systematic method for teaching deaf people to speak. The French Academy of Sciences honored him. King Louis XV granted him a royal pension. He was also a Sephardic Jew whose family had fled Portugal during the Inquisition. The Pereire family traced its lineage to Portuguese Jews who'd converted to Christianity under duress, practiced Judaism secretly, and eventually escaped to France in the early 1700s. They settled in Bordeaux, one of the few French cities where Jews could live legally and conduct business. Bordeaux's Sephardic community was unique in France. Unlike the Ashkenazi Jews concentrated in Alsace and Lorraine, the Sephardim spoke Portuguese and Spanish, maintained connections to Mediterranean trade networks, and enjoyed slightly better legal status. They couldn't own land or join guilds, but they could engage in commerce. Jacob's descendants became merchants and traders. They were educated, multilingual, and ambitious, but they remained outsiders in French society. Isaac Pereire was born in Bordeaux on November 25, 1806. His brother Émile followed on December 3, 1800, though some records suggest 1806, making them twins or near-twins. Their father, Jacob Pereire, was a modest merchant who struggled financially. The family's fortunes mirrored the chaos of post-revolutionary France. Napoleon's reforms had granted Jews full citizenship in 1791, then restricted it again through later decrees. Jewish merchants faced inconsistent legal status, social discrimination, and economic uncertainty. Isaac and Émile grew up speaking French, Portuguese, and Hebrew. They received traditional Jewish education alongside secular schooling, and they absorbed two contradictory messages. France promised equality and opportunity, but French society delivered neither to Jews. Their father died when Isaac was 17. The family had little money. Isaac and Émile needed careers that didn't require aristocratic connections or Christian identity. Banking was closed to them. The major houses were family dynasties. Government service required social status they lacked. Industry required capital they didn't have. So they became writers. Isaac moved to Paris in 1823 and began writing for financial newspapers. He covered banking, railways, and economic policy. He was brilliant, analytical, and obsessed with understanding how finance actually worked. His articles argued that France needed better credit systems, modern infrastructure, and industrial investment. Émile joined him in Paris and wrote about social reform. He was influenced by Saint-Simonian philosophy, which advocated using industrial progress and rational planning to improve society. The Saint-Simonians believed railways, banks, and factories could eliminate poverty and create prosperity for all classes. The brothers became prominent journalists in Paris's economic circles. They met industrialists, bankers, and politicians. They studied how England had financed its railways and canals, and they developed a theory. France's financial system was holding back industrial development. French banks in the 1830s operated conservatively. They lent to governments and aristocrats. They avoided industrial ventures as too risky. They charged high interest and demanded collateral that manufacturers and railway companies couldn't provide. Meanwhile, England was building railways at extraordinary pace, funded by joint stock companies that sold shares to public investors. English banks underwrote these ventures. English savers invested in them. The result was rapid industrialization and economic growth. France had no equivalent system. French railways barely existed. French industry lagged England by decades. And French banks, dominated by conservative houses like the Rothschilds, refused to finance the kind of speculative industrial ventures that England embraced. The Pereire brothers saw this gap as opportunity. In 1835, they published articles advocating for railway development funded by public investment banks. They argued France needed institutions that would mobilize savings from the middle class and invest in railways, canals, and industrial corporations. Traditional banks wouldn't do this. A new kind of bank was needed. Their articles attracted attention from industrialists who shared their frustration with France's banking establishment. But the Pereires lacked capital to act on their ideas. They were journalists writing about finance, not bankers creating it. That changed in 1845 when they met James de Rothschild. Ironically, the man who would become their greatest enemy gave them their first opportunity. Rothschild hired the Pereires to manage construction of the Chemin de Fer du Nord, France's first major railway line connecting Paris to the Belgian border. The railway was a spectacular success. It opened in 1846, operated profitably from the start, and demonstrated that French railways could work. The Pereires managed the project brilliantly, coordinating construction, financing, and operations. They'd proven they could build railways. Now they needed to build the bank that would finance them. The railway that connected Paris to Saint-Germain in 1837 was France's first passenger line. It ran 12 miles, took 20 minutes, and was considered a technological marvel. King Louis-Philippe rode the inaugural journey. Parisians crowded the stations to watch steam locomotives pass. By comparison, England had over 1,000 miles of railway by 1837. The Liverpool and Manchester Railway, opened in 1830, already carried hundreds of thousands of passengers annually. British railway companies were profitable. Their shares traded actively, and British engineers were exporting railway technology globally. France was a decade behind, and the gap was widening. The problem wasn't engineering. French engineers were excellent. The problem was finance. British railways were funded by joint stock companies that raised capital by selling shares to thousands of investors. British banks underwrote these share offerings. British law made it relatively easy to form corporations and raise public capital. France had none of this infrastructure. French banking was dominated by private houses, particularly the Rothschilds, that lent cautiously and avoided risky ventures. French law made it difficult to form joint stock companies without government approval, and French investors, lacking experience with industrial securities, preferred government bonds. The Pereire brothers understood this structural problem intimately. Their work on the Chemin de Fer du Nord from 1845 to 1846 had shown them exactly how railways could be profitable if financed correctly. The Nord line generated immediate revenue. Ticket sales exceeded projections. Freight transport grew monthly. But scaling this success required capital that traditional banks wouldn't provide. In 1847, Isaac Pereire published a detailed proposal for railway expansion. He argued France needed 6,000 miles of railway to connect major cities and industrial regions. The cost would exceed 2 billion francs. No existing bank could finance this alone. The solution was creating specialized investment banks that would raise capital from the public and invest in railways. The proposal was visionary. It was also perfectly timed, and then completely derailed by revolution. In February 1848, King Louis Philippe was overthrown. The July monarchy collapsed. The Second Republic was proclaimed. Paris erupted in street fighting. The economy froze. Railway construction halted. Banks failed. Investors panicked. The Pereire's grand plans for railway finance became irrelevant as France descended into political chaos. But chaos creates opportunity. Louis Napoleon Bonaparte, nephew of Napoleon I, was elected president of the Second Republic in December 1848. He was an unlikely leader. He'd spent years in exile, attempted coups that failed, and was widely considered a mediocrity trading on his uncle's name. He was also obsessed with modernization. Louis Napoleon believed France needed rapid industrial development to compete with England and restore French prestige. He'd spent years in England during exile and had studied British railways, factories, and banking systems. He wanted France to replicate British industrial success. The Pereires saw their opening. They contacted Louis Napoleon's advisors and presented their railway financing proposals. They argued that France's railway network, if properly financed, could transform the economy and cement Louis Napoleon's political legacy. Louis Napoleon was receptive. In 1851, after seizing power in a coup and declaring himself Emperor Napoleon III, he made railway development a top priority. He granted concessions for new railway lines. He streamlined the approval process for forming railway companies, and he signaled that banks financing railways would receive government support. The Pereires moved immediately. In 1852, they proposed creating the Compagnie du Chemin de Fer de Paris à Lyon, a railway that would connect Paris to Lyon and eventually to the Mediterranean. The project was massive, 300 miles initially, with plans to extend to Marseille. Traditional banks, including the Rothschilds, bid to finance the project. They proposed lending money to a government-backed company at fixed interest rates. Conservative, safe, predictable. The Pereires proposed something radical. They would form a company, sell shares to public investors, and use that capital to build and operate the railway. Instead of lending at fixed rates, they would take ownership stakes and profit from the railway's growth. Napoleon III chose the Pereire's proposal. The decision shocked the banking establishment. James de Rothschild, who had employed the Pereires on the Nord Line, was furious. He'd expected the government to follow traditional financing patterns. Instead, Napoleon III was empowering two relatively unknown Jewish journalists to build France's most important railway. The Pereires launched the Paris-Lyon Méditerranée (PLM) Railway Company in 1852. They sold shares to thousands of investors, middle-class professionals, merchants, small-scale capitalists who'd never invested in railways before. The share offering was oversubscribed. Capital poured in. Construction began immediately. The Pereires hired engineers, purchased locomotives from England, and coordinated the largest infrastructure project in French history. They managed every detail: route surveying, land acquisition, bridge construction, station design. The railway opened in sections between 1854 and 1856. Each section generated immediate revenue. Passenger traffic exceeded projections. Freight transport, particularly wine, textiles, and agricultural products, grew exponentially. By 1857, the PLM Railway was one of Europe's most profitable transportation companies. The Pereire's investors had seen their share values triple. The brothers had proven their model worked. But the PLM was just the beginning. The Pereires had a larger vision. Used the same financing model to fund railways across Europe, then extend it to other industries, gas companies, real estate, insurance, steamships. They needed a permanent institution to do this. Not a single-purpose railway company, but a bank specifically designed to finance industrial ventures through public capital. Traditional banks wouldn't work. The Rothschilds and other private houses lent money and charged interest. They didn't take equity stakes. They didn't invest in speculative ventures. The Pereires wanted to create something entirely new, an investment bank that would raise capital by selling its own shares, then invest that capital in industrial companies, profiting from their growth. No such institution existed anywhere in the world. The concept was untested. Banking regulators were skeptical. Conservative financiers called it reckless. The Pereires called it the Crédit Mobilier. And in November 1852, with Napoleon III's blessing, they opened its doors. The bank that would challenge the Rothschilds, transform European finance, and ultimately destroy its creators, was born. The revolution wasn't just in railways, it was in how railways and everything else would be financed. The Société Générale du Crédit Mobilier opened with capital of 60 million francs, raised by selling 12,000 shares at 5,000 francs each. Investors ranged from aristocrats to shopkeepers. Napoleon III himself purchased shares. The offering was oversubscribed within weeks. The bank's structure was revolutionary. Traditional banks like the Rothschilds operated with family capital. They lent money, charged interest, and avoided risk. Their profits came from the spread between what they paid depositors and what they charged borrowers. The Crédit Mobilier operated completely differently. It didn't take deposits. It didn't make traditional loans. Instead, it sold shares to investors, used that capital to buy equity stakes in industrial companies, and profited when those companies succeeded. Think of it as the world's first private equity fund, except it operated publicly and at massive scale. Here's how it worked. A railway company needed 20 million francs to build a new line. Traditional banks would lend the money at 6% interest, secured by the railway's assets. The railway would pay back the loan over time, and the bank would profit from interest. The Crédit Mobilier would instead form the railway company itself, invest capital to build the line, and own shares in the company. When the railway became profitable, the Crédit Mobilier would profit from dividends and share price appreciation. If the railway's value increased, the Crédit Mobilier's assets increased proportionally. This model had enormous advantages. The Crédit Mobilier could finance much larger projects because it wasn't constrained by traditional lending limits. It could take risks that conservative banks avoided, and it could generate far higher returns when investment succeeded. The model also had fatal vulnerabilities that wouldn't become apparent for years. The Pereire's first major investment after the PLM Railway was the Grand Central Railway line, connecting central France to Paris. The Crédit Mobilier provided 25 million francs in capital. The railway opened in 1856 and immediately generated profits. Then they financed the Compagnie Générale Maritime, a steamship line operating between France and Algeria. Then gas companies in Paris and Lyon. Then a real estate development company that would transform entire Paris neighborhoods. Between 1852 and 1856, the Crédit Mobilier financed projects worth over 200 million francs. The bank's own shares, initially sold at 5,000 francs, reached 12,000 francs by 1856. Investors who'd bought at launch had more than doubled their money in 4 years. The Pereiras became celebrities. Financial newspapers praised their genius. Napoleon III invited them to imperial receptions. Émile was elected to the Chamber of Deputies. Isaac advised the government on economic policy. They were also making powerful enemies. James de Rothschild watched the Crédit Mobilier's rise with growing alarm. The Rothschild Bank had dominated European finance for decades through conservative lending, political connections, and monopolistic control over government bond issuance. They'd financed wars, propped up monarchies, and accumulated wealth estimated at over 1 billion francs. The Crédit Mobilier threatened this entire system. The Pereires weren't just building railways, they were creating an alternative financial infrastructure that bypassed traditional banks entirely. Middle-class investors who once bought government bonds were now buying Crédit Mobilier shares. Companies that once borrowed from the Rothschilds were now raising capital through the Crédit Mobilier. Rothschild responded strategically. He couldn't attack the Crédit Mobilier directly. Napoleon III supported the Pereires too strongly. Instead, Rothschild began questioning the bank's stability. He pointed out that the Crédit Mobilier's assets were mostly equity stakes in companies, not cash or liquid securities. If those companies failed or if share prices fell, the Crédit Mobilier's assets would collapse. The bank was vulnerable to market panics in ways traditional banks weren't. Rothschild also noted that the Crédit Mobilier was paying high dividends to shareholders, often 8 to 10% annually, while investing aggressively in new projects. Where was the dividend money coming from? Suspicious financial analysts suggested the Crédit Mobilier might be paying dividends from new capital raised, not from actual profits. This was a serious accusation. If true, the Crédit Mobilier was running a Ponzi scheme, paying existing investors with money from new investors rather than from genuine returns. The Pereires denied this furiously. They published detailed financial statements showing that dividends came from real profits on their investments. The PLM railway alone generated enough dividends to cover much of the Crédit Mobilier's payouts. Gas companies, steamships, and other investments contributed additional revenue. But Rothschild's accusations planted doubt. Some investors became nervous. Share prices wobbled in 1857 when a minor financial panic hit European markets. The Pereires responded by accelerating expansion. They believed the best defense was demonstrating success at ever larger scale. If they could finance railways across all of Europe, if they could transform entire cities, if they could prove their model worked consistently, the doubts would disappear. So they expanded into Austria. The Österreichische Kreditanstalt für Handel und Gewerbe, modeled directly on the Crédit Mobilier, was established in Vienna in 1855 with Pereire support. It financed Austrian railways, industrial development, and urban infrastructure. They expanded into Spain. The Sociedad General de Crédito Mobiliario Español, another Crédit Mobilier clone, was established in Madrid in 1856. It financed Spanish railways and mining operations. They even planned expansion into Russia, proposing a railway network that would connect Moscow to the Black Sea and eventually to the Persian Gulf. The vision was extraordinary. A network of investment banks across Europe, all modeled on the Crédit Mobilier, all financing industrial development through public capital, all controlled or influenced by the Pereire brothers. If successful, they would create a financial system that rivaled the Rothschilds' international network. They would transform European capitalism from a system dominated by aristocratic banking houses to one driven by middle-class investment and industrial growth. Napoleon III supported this vision enthusiastically. He saw the Pereires as instruments of French economic power. If French investment banks financed European railways, France would dominate European commerce and industry. But the expansion required constant new capital. The Crédit Mobilier needed to raise more money to finance each new project. That meant issuing new shares, which diluted existing investors, or it meant borrowing, which contradicted the bank's core model of using equity rather than debt. The Pereires chose a third option. They used the Crédit Mobilier's shares as collateral to borrow from other banks, then invested that borrowed money in new projects. This was financially creative and extremely dangerous. The Crédit Mobilier was now leveraged. It owed money based on the value of its shares. If its share price fell significantly, creditors would demand repayment. If the Crédit Mobilier couldn't pay, it would face bankruptcy regardless of whether its underlying investments were sound. The Pereires understood this risk intellectually, but they believed share prices would keep rising because their investments would keep succeeding. The PLM railway was profitable. The Austrian and Spanish operations were growing. Gas companies were generating steady revenue. What they didn't fully grasp was that share prices depend on investor confidence, not just underlying fundamentals. and investor confidence could evaporate instantly if anything went wrong. Meanwhile, James de Rothschild was watching carefully, waiting for an opportunity to strike. The Pereires had built an empire, but empires built on leverage and confidence are extraordinarily vulnerable. The Rothschild-Pereire War was about to intensify, and it would determine not just who controlled European finance, but what kind of capitalism would dominate for the next century. By 1860, the Crédit Mobilier controlled or influenced assets worth 600 million francs. That's approximately $9 billion in today's money. The portfolio was stunning in its diversity and scale. Railways formed the core. The PLM line was France's most profitable railway. The Grand Central connected Paris to central France. The Midi Railway linked southern France to Spain. In Austria, Pereire-backed lines connected Vienna to Prague and Trieste. In Spain, railways ran from Madrid to the Portuguese border and from Barcelona to Zaragoza. The Pereires owned thousands of miles of track, hundreds of locomotives, and station infrastructure across 4 countries. Railway revenue alone generated over 50 million francs annually. But railways were just the beginning. The Compagnie Immobilière de Paris, a Pereire-controlled real estate company, was transforming entire Paris neighborhoods. Under Napoleon III, Paris was being rebuilt by Baron Haussmann, who demolished medieval quarters and constructed wide boulevards, parks, and modern buildings. The Pereires financed much of this reconstruction. They bought land, built apartment buildings and commercial structures, and sold or leased them at enormous profit. The Rue de Rivoli, Boulevard Haussmann, and entire sections of the 8th arrondissement were Pereire projects. One development alone, the neighborhood around Parc Monceau, involved constructing over 200 buildings on 80 acres. The Pereires invested 30 million francs and expected returns exceeding 100 million as property values rose. They also built the Grand Hôtel du Louvre, Paris's first luxury hotel catering to international travelers. It opened in 1855 with 700 rooms, a grand ballroom and a restaurant. The hotel became synonymous with Parisian luxury, hosting royalty, diplomats, and wealthy tourists. The Pereires replicated the hotel model across Europe. The Grand Hotel in Vienna, the Hôtel du Louvre in Marseille, plans for luxury hotels in Madrid and St. Petersburg. They envisioned a network of hotels serving railway travelers, all Pereire-owned, creating a vertically integrated travel and hospitality empire. Gas lighting was another major investment. The Compagnie Parisienne d'Éclairage et de Chauffage, Par le Gaz, supplied gas to thousands of Paris buildings and streetlights. The Pereires held controlling stakes. Gas provision was extraordinarily profitable. Contracts with the city government guaranteed stable prices and monopolistic supply rights. They expanded gas operations to Lyon, Marseille, and Bordeaux. Each city granted exclusive franchises. Each franchise generated steady revenue with minimal competition. Insurance represented another expansion. The Compagnie d'Assurance Urbaine et Rurale, backed by Crédit Mobilier Capital, offered property and liability insurance. The Pereires saw insurance as complementary to real estate and railways. Property developers needed insurance, railway companies needed liability coverage. Steamship lines completed the portfolio. The Compagnie Générale Maritime operated routes between France and Algeria, carrying passengers, freight, and military cargo. The Pereires bid for routes to the Americas and Asia, planning a global shipping network that would connect to their railways. The empire's scope was breathtaking. Investors who bought Crédit Mobilier shares in 1852 at 5,000 francs saw them reach 15,000 francs by 1861. The bank paid annual dividends of 10%. Émile and Isaac Pereire were among the wealthiest men in France, worth an estimated 100 million francs combined. They lived accordingly. Émile built a mansion on Avenue Hoche with art collections, private libraries, and formal gardens. Isaac purchased a chateau outside Paris. They hosted salons attended by artists, intellectuals, politicians, and industrialists. They funded charities, endowed scholarships, and commissioned public monuments. They'd achieved what their grandfather could never have imagined: acceptance into France's economic elite. Despite being Jewish, despite lacking aristocratic lineage, despite starting with nothing but ideas. But acceptance wasn't universal. Anti-Semitic newspapers criticized the Jewish speculators transforming Paris. Conservative Catholics opposed Jewish influence over French finance, and aristocratic banking houses, particularly the Rothschilds, resented upstarts threatening established hierarchies. The Pereires responded by emphasizing their contributions to French greatness. Their railways strengthened France strategically. Their urban development beautified Paris. Their industrial investments created employment. They were patriots using finance to serve national interests. Napoleon III agreed. He relied on the Pereires for economic policy advice. He attended openings of Pereire railways and hotels. He granted them honors and titles. In 1863, he made Émile a Grand Officer of the Legion of Honor. The emperor's support seemed unshakable. The Pereires believed they were untouchable. They were wrong. The empire's complexity created vulnerabilities. Each investment required continuous capital. Railways needed ongoing maintenance and expansion. Real estate developments required years before generating returns. Hotels operated on thin margins initially. Gas companies required infrastructure investment before profits materialized. The Crédit Mobilier was constantly raising new capital to fund these investments. Between 1852 and 1863, the bank raised over 300 million francs through share offerings and bond issues. Much of that capital was immediately invested in projects that wouldn't generate returns for years. This created a timing problem. The Crédit Mobilier owed dividends to shareholders annually. It owed interest to bondholders, but many of its investments weren't yet profitable. The bank was paying out money faster than investments generated returns. The Pereires solved this by borrowing. They used Crédit Mobilier shares as collateral to take loans from other banks. They issued short-term bonds to raise cash quickly. They even borrowed from the Bank of France using railway shares as security. By 1863, the Crédit Mobilier's debt exceeded 200 million francs. The bank's leverage ratio, debt relative to equity, had reached dangerous levels. If share prices fell, creditors would demand repayment. If investments underperformed, the bank couldn't meet obligations. The Pereires weren't ignorant of these risks. They understood they were operating on the edge, but they believed growth would solve everything. If railways kept expanding, if real estate values kept rising, if gas companies kept signing contracts, the returns would eventually exceed the costs. They just needed time. James de Rothschild was determined they wouldn't get it. Rothschild had been quietly undermining the Crédit Mobilier for years. He spread rumors about the bank's financial instability. He lobbied regulators to investigate the bank's accounting. He encouraged newspapers to question how the Pereires paid such high dividends. But Rothschild's most effective strategy was competition. In 1859, he established the Société Générale, a new bank designed explicitly to compete with the Crédit Mobilier. The Société Générale would finance railways and industrial projects, using more conservative methods, lending rather than equity investment, shorter-term commitments, lower leverage. The Société Générale had enormous advantages. It was backed by Rothschild's vast wealth. It had established relationships with governments and corporations, and it wasn't burdened by the Crédit Mobilier's legacy commitments. Competition intensified across every sector. When the Pereires bid to finance a Spanish railway, the Société Générale submitted lower-cost proposals. When the Pereires sought gas franchises in German cities, Rothschild-backed companies submitted competing bids. The Pereires were forced to accept lower returns to win contracts. Margins compressed. Projects that might have been highly profitable became merely adequate. Meanwhile, the political environment was shifting. Napoleon III's support for the Pereires was eroding. The emperor faced growing opposition from liberals who opposed his authoritarian rule and from Catholics who resented Jewish financial influence. Supporting the Pereires was becoming politically costly. By 1864, Napoleon III was distancing himself. He still met with the Pereires occasionally, but no longer championed them publicly. Imperial favors dried up. Regulatory approvals took longer. Government contracts went to competitors. The Pereires recognized the danger. They needed a spectacular success to restore confidence and demonstrate the Crédit Mobilier's strength. They needed an investment so large and profitable that it would silence critics, restore Napoleon III's support, and prove their model worked at any scale. They found it in Mexico. In 1863, France invaded Mexico to install Archduke Maximilian of Austria as emperor. Napoleon III saw this as an opportunity to expand French influence in Latin America. The Pereiras saw an opportunity to finance Mexican railways, mines, and infrastructure. They proposed financing a railway from Mexico City to Veracruz, opening Mexican silver mines with French capital, and establishing banks modeled on the Crédit Mobilier throughout Latin America. The Mexican venture was extraordinarily risky. Mexico was politically unstable. The invasion was opposed by the United States. Maximilian's regime was weak and faced constant rebellion. But the potential returns were enormous. Mexico had vast mineral wealth. A railway connecting the capital to the coast would transform Mexican commerce, and establishing French financial presence in Latin America would position the Pereiras as global players, not just European ones. The Pereiras committed 50 million francs to Mexican ventures. They sold bonds to finance the investment. They assured investors that Napoleon III's military support made Mexican investments secure. They were betting the entire empire on a French military adventure in a country they didn't understand, backed by a regime that would collapse within 4 years. It was the beginning of the end. The rivalry between the Pereiras and the Rothschilds wasn't just economic competition. It was cultural, religious and ideological warfare fought through balance sheets and bond offerings. James de Rothschild was born in 1792 in Frankfurt, the youngest son of Mayor Amschel Rothschild, who'd founded the banking dynasty. James had been sent to Paris in 1811 to establish the French branch of the family business. By the 1860s, he'd been building the Rothschild fortune for over 50 years. The Rothschild model was conservative and relationship-based. They lent to governments, financing wars and managing national debts. They maintained close connections to European monarchies and aristocracies. They operated through private capital, never selling shares publicly. They avoided speculative ventures and industrial investments. This approach had made the Rothschilds incomprehensibly wealthy. Estimates of the family's combined wealth in the 1860s ranged from 1 billion to 2 billion francs, more than the annual budget of most European governments. The Pereiras represented everything the Rothschilds opposed. They raised capital publicly. They invested speculatively. They financed railways and factories instead of governments. They democratized investment by selling shares to middle-class investors. And they were succeeding. The ideological dimension was profound. The Rothschilds believed finance should be conservative, aristocratic, and risk-averse. The Pereiras believed finance should be progressive, democratic, and growth-oriented. These weren't just different business strategies. They were competing visions of capitalism itself. The religious dimension complicated everything. Both families were Jewish, but from different traditions. The Rothschilds were Ashkenazi, German-speaking, and deeply connected to Central European Jewish communities. The Pereiras were Sephardic, Portuguese-speaking, and connected to Mediterranean Jewish networks. In 19th-century European Jewish communities, these distinctions mattered enormously. Ashkenazi and Sephardic Jews had different liturgies, different languages, different social networks. They rarely intermarried. They sometimes viewed each other with suspicion. The Rothschild-Pereire rivalry took on overtones of intra-Jewish competition. Anti-Semitic newspapers gleefully covered the Jewish banking war, using it to claim Jews were inherently scheming and untrustworthy. More responsible observers noted the rivalry demonstrated Jewish diversity and integration into French society. But the personal dimension was perhaps most intense. James de Rothschild had employed the Pereire brothers on the Nord Railway in the 1840s. He'd mentored them, introduced them to banking practices, and trusted them with major projects. Then they'd used that knowledge to compete against him. From Rothschild's perspective, the Pereiras were ungrateful apprentices who'd betrayed their patron. He'd given them opportunity, and they'd responded by challenging his entire business model. The Pereiras saw it differently. They'd worked for Rothschild and learned that his conservative approach was holding back French development. They weren't betraying him. They were transcending an outdated system. The conflict escalated throughout the 1850s and early 1860s, Rothschild blocked Pereire access to certain government contracts. The Pereires responded by underbidding Rothschild on railway projects. Rothschild spread rumors about Crédit Mobilier instability. The Pereires published articles defending their model. In 1860, the competition became open warfare. The Pereires attempted to gain control of the Austrian National Bank, which would have given them influence over Austria's entire financial system. Rothschild, who had close relationships with the Austrian imperial family, lobbied intensely to block the Pereire bid. Rothschild won. The Austrian government rejected the Pereire proposal and instead granted the Rothschild Bank expanded privileges. The Pereires retaliated by financing the Austrian Kreditanstalt to compete directly with Rothschild operations in Vienna. They poured capital into Austrian railways, establishing parallel networks to Rothschild-backed lines. In Spain, competition was even more intense. Both families financed competing railway networks. The Pereires backed the Madrid-Zaragoza-Alicante line. Rothschild backed the rival Norte line. Both railways built parallel tracks, duplicating infrastructure and competing for the same passengers and freight. The duplication was economically insane. Spain didn't need two complete railway networks, but the competition wasn't about rational allocation of capital. It was about establishing dominance. Rothschild had advantages the Pereiras couldn't match. His personal wealth exceeded the Crédit Mobilier's total assets. He could absorb losses that would bankrupt the Pereiras. He had relationships with European monarchies dating back decades. And he wasn't constrained by shareholders or public accountability. The Rothschild Bank was entirely family-owned. The Pereiras had one crucial advantage: Napoleon III's support. The emperor preferred the Pereire model because it strengthened French economic independence. Rothschild was powerful, but he was also international, with loyalty to his family network across Europe. The Pereiras were French, and their success benefited France directly. But Napoleon III's support was contingent. The emperor backed winners. If the Crédit Mobilier faltered, his support would evaporate. In 1863, Rothschild saw an opportunity to destroy the Pereiras permanently. The Mexican adventure was failing. French troops were bogged down fighting Mexican resistance. Maximilian's regime was collapsing, and the Pereiras had committed 50 million francs to Mexican investments that were clearly worthless. Rothschild began quietly selling Crédit Mobilier shares he'd acquired. He didn't announce it publicly. That would have been too obvious. Instead, he sold gradually, depressing the share price slowly but steadily. Other investors noticed the declining price and became nervous. If the Crédit Mobilier's shares were falling, perhaps the bank had problems. Some began selling their shares too. The Pereiras tried to stabilize the price by buying their own shares. They used Crédit Mobilier capital to purchase shares on the open market, supporting the price artificially. This was legal but extremely dangerous. The bank was using its assets to prop up its own share price. If the price kept falling, the bank would exhaust its capital buying worthless shares. Rothschild recognized what was happening and accelerated his selling. He was forcing the Pereiras into a trap: either let the share price collapse, which would trigger creditor demands for repayment, or keep buying shares and exhaust the bank's capital. The Pereiras chose to keep buying. Between 1863 and 1865, the Crédit Mobilier spent over 100 million francs purchasing its own shares. The bank's cash reserves dwindled. Liquid assets were converted to illiquid shareholdings. Meanwhile, the Crédit Mobilier's underlying investments were underperforming. Mexican ventures were total losses, 50 million francs gone. Spanish railways were barely profitable due to competition from Rothschild lines. Austrian operations faced regulatory obstacles. The only consistently profitable investments were the French railways and gas companies. But those couldn't generate enough cash to cover the Crédit Mobilier's obligations: dividend payments to shareholders, interest payments to bondholders, and now the cost of buying its own shares. By 1865, the Crédit Mobilier was in crisis. The bank owed 200 million francs to creditors. Its cash reserves were under 50 million francs. Share prices had fallen from 15,000 francs in 1861 to 8,000 francs in 1865. despite the Pereire's efforts to support the price. The Pereires needed a rescue. They approached Napoleon III, asking for government support, either a loan or a guarantee that would restore confidence. Napoleon III refused. The emperor was facing his own political problems. His Mexican adventure was a disaster. Opposition to his rule was growing. Supporting the failing Crédit Mobilier would make him look weak and financially irresponsible. The Pereires turned to other banks, seeking emergency loans. The Rothschilds, unsurprisingly, declined. Other banks, worried about the Crédit Mobilier's stability, demanded punitive interest rates and strict conditions. The Pereires had no good options. They could seek bankruptcy protection, which would destroy their reputations and wipe out investors. They could liquidate assets at fire sale prices to raise cash, or they could pray that their investments would suddenly become profitable enough to cover obligations. They chose to pray while selling assets slowly. Between 1865 and 1867, they sold stakes in gas companies, steamship lines, and some railway holdings. They raised capital, but at terrible prices. Buyers knew the Pereires were desperate and negotiated accordingly. The asset sales bought time but didn't solve the fundamental problem. The Crédit Mobilier was over-leveraged, undercapitalized, and unable to generate enough cash to meet obligations. Rothschild watched with satisfaction. He'd spent 15 years undermining the Pereires, and victory was approaching. The Crédit Mobilier would collapse, the Pereire model would be discredited, and conservative banking would be vindicated. But Rothschild wanted more than victory. He wanted humiliation. He wanted the Pereires not just defeated, but destroyed, their reputations ruined, their names synonymous with financial recklessness. In early 1867, Rothschild began the final assault. He called in loans he'd made to companies that owed money to the Crédit Mobilier. Those companies, unable to pay both Rothschild and the Crédit Mobilier, defaulted on their obligations to the Pereires. This triggered a cascade. Other creditors, seeing defaults, demanded immediate repayment from the Crédit Mobilier. The bank couldn't pay everyone simultaneously. More defaults occurred. In March 1867, the Crédit Mobilier's share price collapsed, falling from 8,000 francs to 3,000 francs in 2 weeks. Panic selling accelerated the decline. By April, shares traded at 1,000 francs, 80% below their peak. Creditors demanded immediate repayment. The Crédit Mobilier couldn't meet the demands. Bankruptcy was imminent. On July 9, 1867, the Pereire brothers resigned from the Crédit Mobilier's board of directors. They issued a statement claiming they'd been forced out by conspirators who'd undermined the bank's stability. Nobody believed them. The financial world knew the truth. The Pereires had overextended, over-leveraged, and been outmaneuvered by the Rothschilds. The empire was finished. 15 years of building, countless innovations, thousands of investors' trust, all destroyed. And James de Rothschild, 75 years old and wealthier than ever, had won the banking war completely. The numbers from 1866 tell the story of overreach with brutal clarity. The Crédit Mobilier held assets valued at 600 million francs on paper. The bank owed 300 million francs to creditors. That left 300 million in theoretical equity. But assets and liabilities on paper don't capture reality when your assets are illiquid equity stakes and your liabilities are immediate cash obligations. Let me break down what the Crédit Mobilier actually owned in 1866. The largest holdings were railway shares, 40% of the PLM railway, 30% of the Midi line, major stakes in Austrian and Spanish railways. Total railway portfolio value, 250 million francs at market prices. Real estate came next. The Compagnie Immobilière owned buildings across Paris worth 100 million francs, but that valuation assumed you could sell them at market prices. Trying to sell everything quickly would flood the market and crash prices. Gas companies, hotels, steamship lines, and insurance ventures accounted for another 150 million francs. Again, those were book values assuming orderly sales. Then there were the problem assets. Mexican investments, 50 million francs committed, current value approximately zero. Maximilian's regime was collapsing. The railway concessions were worthless. The mining ventures never materialized. Various loans to companies in financial distress, 30 million francs. Most would never be repaid. Holdings of the Crédit Mobilier's own shares. 70 million francs spent buying shares to support the price. These weren't assets. They were the bank's own equity, essentially retired shares that still appeared on the books. So the 600 million in assets was really closer to 450 million in realistic value, and maybe 300 million in fire sale liquidation. Against this, the bank owed 300 million in immediate and near-term obligations. Bondholders needed interest payments totaling 15 million francs annually. Shareholders expected dividends of 30 million francs per year. Short-term loans from other banks totaled 100 million francs, some coming due in 1867. The arithmetic was catastrophic. The Crédit Mobilier needed to generate 45 million francs annually just to meet obligations, before any new investments or operational costs. Its actual income from railway dividends, gas company payments, and rental income was approximately 35 million francs. That 10 million franc annual shortfall didn't sound enormous, but it was recurring and growing. And the bank had no margin for error. Any unexpected expense, any investment underperformance, any delay in receiving payments would widen the gap. The Pereiras had understood this intellectually. Their strategy was growth. Keep expanding until the portfolio generated enough income to cover obligations and provide cushion. Every railway they completed would eventually be profitable. Every building they constructed would eventually generate rent. They just needed time for investments to mature. Time was the one thing they didn't get. Multiple factors converged in 1866 to trigger crisis. First was the Austro-Prussian War. Austria and Prussia went to war in June 1866 over control of German territories. The war lasted 7 weeks and ended with crushing Prussian victory. Austrian railways, gas companies and industrial ventures controlled by the Crédit Mobilier's Austrian affiliate collapsed financially. The Credit Anstalt, which the Pereiras had backed to compete with Rothschild in Vienna, faced bankruptcy. The Crédit Mobilier had guaranteed some of the Credit Anstalt's debts. Those guarantees came due. The Crédit Mobilier owed 20 million francs to cover Credit Anstalt's obligations. The money had to be paid immediately to prevent default. The Pereiras scrambled to raise 20 million francs. They borrowed from the Bank of France at punitive rates. They sold gas company shares. They delayed payments to contractors and suppliers. The crisis was temporarily contained, but the market noticed. If the Crédit Mobilier was borrowing at high rates to cover obligations, the bank must be in trouble. Share prices fell from 12,000 francs in January 1866 to 9,000 francs by September. Then Mexico imploded completely. In early 1867, Napoleon III ordered French troops withdrawn from Mexico. Without French military support, Maximilian's regime collapsed within months. Maximilian was captured and executed by Mexican Republicans in June 1867. Every franc the Pereiras had invested in Mexico was gone. 50 million francs simply evaporated. Losing 50 million would have been manageable for a healthy bank. For the Crédit Mobilier in 1867, it was existential. The bank's cash reserves after covering Austrian obligations were under 40 million francs. Losing the Mexican investments meant the bank was effectively insolvent. Liabilities exceeded realizable assets. The Pereiras tried desperately to hide the insolvency. They published financial statements claiming the Mexican investments still had value as long-term strategic holdings. They argued that once Mexico stabilized politically, the railway concessions would be worth millions. Nobody believed them. Mexican railway concessions granted by a dead emperor shot by rebels had zero value. The Pereiras were lying to shareholders about the bank's financial condition. French financial regulators began investigating. The investigation itself was market poison. If regulators were examining the Crédit Mobilier's books, something was seriously wrong. Share prices accelerated downward. 9,000 francs in September 1866, 7,000 in January 1867, 5,000 in March. Creditors holding Crédit Mobilier bonds panicked. If the bank was insolvent, bonds might be worthless, and he framed his opposition as protecting innocent investors in the railway and gas companies who'd be harmed by association with the failing Crédit Mobilier. Regulators delayed approval of the merger pending further investigation. The delay was fatal. Without the merger, the Crédit Mobilier had no path to survival. In June 1867, the Bank of France, France's central bank, called in loans it had made to the Crédit Mobilier. The Bank of France had lent 40 million francs secured by railway shares. With Crédit Mobilier shares collapsing, the Bank of France wanted its money back. The Crédit Mobilier couldn't repay 40 million francs. The bank had less than 20 million in liquid assets. Default on a Bank of France loan meant automatic bankruptcy. The Pereires tried negotiating. They offered to transfer railway shares directly to the Bank of France as repayment. They proposed extending the loan term. They begged for time. The Bank of France, under pressure from the Ministry of Finance, refused. The government wanted the Crédit Mobilier crisis contained. Allowing the bank to default on a central bank loan would trigger panic across French financial markets. The solution was brutal. The Bank of France would seize the Crédit Mobilier's assets as collateral. The bank would be placed under administrative control. The Pereire brothers would be removed from management. On July 9, 1867, the Pereires received formal notice. They were being forced out of the Crédit Mobilier, effective immediately. A government-appointed administrator would take control of the bank. Assets would be liquidated in orderly fashion to repay creditors. The Pereires issued a public statement claiming they'd been victimized by conspirators, unnamed enemies who'd manipulated markets to destroy the bank. They insisted the Crédit Mobilier was fundamentally sound and that its investments would prove valuable over time. The statement convinced no one. Financial analysts pointed out that the Pereires had leveraged the bank excessively, invested recklessly in Mexican adventures, and paid dividends from borrowed money rather than real profits. Newspapers that had once praised the Pereire's genius now condemned their recklessness. The Pereire brothers built an empire on sand, wrote Letomp. They gambled with other people's money and lost everything. The anti-Semitic press was predictably vicious. Edouard Drumont, a notorious anti-Semite, published articles claiming the Crédit Mobilier's collapse proved Jews were inherently untrustworthy with finance. More responsible observers noted that Christian-owned banks had failed too, but that nuance was lost in the scandal. What hurt the Pereires most was Napoleon III's silence. The emperor who'd championed them for 15 years said nothing publicly. Privately, he told advisers the Pereires had embarrassed France and deserved their fate. The Pereires were devastated. They'd built everything, railways, banks, cities, with Napoleon III's support. They'd believed their relationship with the emperor was unshakable. They learned that imperial favor is contingent on success. Winners get praised, losers get abandoned. By August 1867, the Crédit Mobilier was under government administration. Assets were being sold to repay creditors. The bank's shares, which had peaked at 15,000 francs, traded at 800 francs. Investors who'd bought at peak had lost 95% of their investment. The Pereire brothers retained some personal wealth. They'd sold Crédit Mobilier shares near the peak and invested in property. They weren't destitute, but they were ruined professionally and socially. Émile was 70 years old. Isaac was 61. They'd spent their entire adult lives building the Crédit Mobilier empire. Now it was gone, liquidated to satisfy creditors, their innovations forgotten, their reputations destroyed. And across Paris, in his mansion on Rue Lafitte, James de Rothschild was finally satisfied. The upstart competition had been eliminated. Conservative banking had been vindicated. The Rothschild model, cautious, private, relationship-based, had proven superior to the Pereire model of speculative public investment. The banking war was over. Rothschild had won. But the story wasn't finished. The Crédit Mobilier's collapse would have consequences that neither the Pereires nor the Rothschilds anticipated. The liquidation of the Crédit Mobilier took 3 years and destroyed thousands of lives. The government-appointed administrator, a banking expert named Jules Mires, faced an impossible task: sell 600 million francs in assets to repay 300 million francs in debts, when everyone knew the assets were worth far less than book value. Mires started with the most liquid holdings. Railway shares were sold first. The PLM railway stake, valued at 80 million francs, on Credit Mobilier books, sold for 45 million. Buyers knew Pereire was desperate and negotiated accordingly. The Midi Railway shares went for similar discounts. Austrian railway holdings sold at 50% of book value. Spanish railways fetched even less, 30% of claimed value, because Spain's railway market was oversupplied due to the Rothschild Pereire competition that had duplicated infrastructure. Every sale generated losses. The Credit Mobilier had invested at peak prices during boom years. Now, selling during panic conditions, assets fetched depression prices. Real estate was worse. The Compagnie Immobilier owned hundreds of buildings across Paris. Under normal conditions, these properties could be sold individually over several years to maximize value. Pereire didn't have years. He needed to raise cash immediately to prevent creditor lawsuits. Buildings were sold in bulk at auction. Speculators bought entire blocks at 40% discounts, knowing Pereire had no choice but to accept low bids. Property that the Pereires had valued at 100 million francs realized 55 million in actual sales. Gas companies sold for better prices because they generated steady revenue and had monopolistic city contracts. But even there, buyers extracted discounts. The Paris Gas Company, valued at 40 million francs, sold for 32 million. Hotels, steamship lines, and insurance ventures were dumped at whatever price buyers would pay. The Grand Hotel du Louvre, symbol of Pereire luxury and ambition, was sold to a consortium of investors for 20 million francs, less than construction costs. By 1870, Pereire had liquidated most assets and raised approximately 250 million francs. Against 300 million in debts, that left a 50 million franc shortfall. Bondholders received 75% of face value. They lost a quarter of their investment. Shareholders received nothing. Their shares, once worth 15,000 francs, were worthless. The Credit Mobilier was bankrupt. Capital was gone. The human impact was staggering. Over 40,000 investors had owned Credit Mobilier shares or bonds. Most were middle-class families, doctors, lawyers, shopkeepers, government clerks, who'd invested savings believing the Pereire's vision. One investor, a Paris pharmacist named Henri Dubois, had invested his entire life savings, 60,000 francs, in Credit Mobilier shares in 1861. By 1870, those shares were worthless. Dubois lost his pharmacy to creditors. He died in 1872, impoverished. Stories like Dubois's appeared in newspapers throughout the liquidation. Elderly couples who'd invested retirement funds, widows who'd invested life insurance payouts, young professionals who'd invested first earnings, all lost everything. The psychological impact on French investing culture was profound. Middle-class families who'd been encouraged to invest in industrial ventures became deeply skeptical of securities. For decades afterward, French investors preferred government bonds and real estate to corporate shares. The Credit Mobilier collapse validated conservative banking's warnings. See what happens. The Rothschilds could say, when you abandon prudent lending for speculative investment. The Pereires had promised democratized capitalism and delivered middle-class ruin. But the collapse also revealed how conservative banking protected itself at everyone else's expense. The Rothschilds hadn't just competed with the Pereires, they'd actively worked to destroy them. When the Credit Mobilier needed support during the 1866 to 1867 crisis, Rothschild had called in loans and accelerated the collapse. Rothschild's defenders argued he was protecting his investors and maintaining market discipline. Critics noted he'd destroyed a competitor and bought many Credit Mobilier assets at fire sale prices, profiting from the collapse he'd helped cause. The truth was both were correct. Rothschild had acted in his interests, which included eliminating competition and acquiring assets cheaply. That those actions had destroyed thousands of investors was unfortunate, but not his responsibility. This attitude, that banks should maximize their own returns regardless of broader social impact, would characterize financial capitalism for the next century. The Pereires had tried to create a different model where banks served industrial development and broad-based prosperity. Their failure meant that alternative model was discredited. For the Pereire brothers personally, the collapse was utterly devastating. Émile was 70 when forced from the Credit Mobilier. He'd spent 40 years building the bank and empire. His entire adult life's work was erased. He retreated to his mansion on Avenue Hoche. He stopped attending social functions. Friends who'd celebrated his success disappeared. Émile became a recluse, bitter and broken. Isaac was 61 and slightly more resilient. He tried to salvage parts of the empire. He retained personal ownership of some gas company shares and continued receiving dividends. He invested in small railway ventures in southern France. But Isaac's reputation was destroyed. Banks wouldn't lend to him. Investors wouldn't trust him. His proposals were rejected before being read because his name was attached. Both brothers wrote memoirs defending their actions. They claimed the Crédit Mobilier had been fundamentally sound and that enemies had conspired to destroy it through market manipulation and false rumors. Their memoirs were published in limited editions and read by almost no one. The public had moved on. The Pereiras were yesterday's scandal, forgotten as soon as the next financial drama emerged. The legal aftermath was complex and ugly. Shareholders filed lawsuits claiming the Pereiras had committed fraud by concealing the bank's true financial condition. They argued the brothers had continued paying dividends when the bank was insolvent, essentially running a Ponzi scheme. Prosecutors investigated, but ultimately filed no criminal charges. Technically, the Pereiras hadn't stolen money or lied in official documents. They'd been overly optimistic, excessively leveraged, and terrible at risk management. But those weren't crimes. Civil lawsuits were settled for nominal amounts. The Pereiras paid small settlements to avoid lengthy trials, admitting no wrongdoing, but agreeing to compensate some investors minimally. The settlements protected them from prison, but not from public judgment. They were seen as reckless speculators who'd gambled with other people's money and lost. Napoleon III, who'd supported the Pereiras for 15 years, never spoke to them again after their removal from the Crédit Mobilier. The emperor was dealing with his own crises, growing political opposition, military failures, and economic stagnation. He had no interest in defending discredited financiers. By 1870, Napoleon III himself was finished. The Franco-Prussian War destroyed the Second Empire. Napoleon was captured at Sedan in September 1870. The Third Republic was proclaimed. The emperor went into exile in England. The Pereiras must have found grim satisfaction in their patron's fall. They'd risen with Napoleon III and fallen with him. His abandonment of them in 1867 proved temporary anyway. He couldn't save himself either, but that satisfaction was cold comfort. Isaac died in 1880 at age 74. He'd lived 13 years after the Crédit Mobilier's collapse, spending most of that time in obscurity, occasionally writing articles that newspapers rarely published. Émile outlived his brother by barely 6 months, dying in September 1880 at age 80. His obituary in Le Figaro was 4 paragraphs long, mentioning the Crédit Mobilier collapse, but providing little detail about his achievements. Compare that to James de Rothschild's obituary when he died in 1868, 1 year after destroying the Pereiras. Rothschild's obituary filled multiple pages across French newspapers. He was celebrated as France's greatest banker, a financial genius who'd shaped European politics for 5 decades. The contrast captured everything. Rothschild died wealthy, honored, successful. The Pereiras died marginalized, blamed, forgotten. Yet the irony was that Rothschild banking was also dying, just more slowly. The conservative model of private family banking that the Rothschilds represented would be replaced by corporate investment banks, modeled on the Crédit Mobilier. But that vindication came too late for the Pereiras. They didn't live to see their ideas triumph. They died believing they'd failed completely. The broader economic consequences of the Crédit Mobilier collapse shaped French development for decades. France's railway system, largely built by Pereire-financed companies, continued operating under new ownership. The PLM, Midi, and other lines were taken over by the state or sold to conservative banking syndicates, but railway expansion slowed dramatically. Between 1852 and 1867, France had built over 4,000 miles of new railway. Between 1867 and 1914, expansion added only 3,000 additional miles. The Crédit Mobilier's collapse had made railways seem risky, reducing investor appetite for financing new lines. French industrialization similarly slowed. The Crédit Mobilier had financed factories, gas companies, and industrial ventures across France. After its collapse, industrial financing became more difficult. Banks returned to conservative lending, avoiding equity investments. France fell further behind Germany and England industrially. By 1900, French manufacturing output per capita was significantly lower than Germany's. Some economic historians attribute this gap partly to France's more conservative financial system. After the Crédit Mobilier trauma, Paris real estate development also slowed. The Compagnie Immobilière had financed massive reconstruction under Haussmann. After 1867, development became more incremental. Buildings were still constructed, but the grand vision of transforming entire neighborhoods through coordinated investment was abandoned. The psychological impact on French finance was perhaps most important. French investors became risk-averse, preferring bonds to stocks, traditional banks to investment banks. This conservative culture persisted through the early 20th century, contributing to France's relative economic stagnation. Meanwhile, in England and Germany, investment banks modeled on the Crédit Mobilier were being established. These banks would finance the Second Industrial Revolution: steel, chemicals, electricity, automobiles. They used the Pereire's methods: raising public capital, taking equity stakes, investing in industrial ventures. Those banks succeeded where the Crédit Mobilier failed, not because their model was different, but because they learned from the Pereire's mistakes. They maintained higher capital cushions. They avoided excessive leverage. They didn't pay dividends they couldn't afford. They diversified more carefully. They built their empires on the Crédit Mobilier's corpse, using its bones as foundation. Every investment bank that followed owed something to the Pereires. But the debt was rarely acknowledged. By the 20th century, the Pereire brothers were historical footnotes. Finance textbooks mentioned the Crédit Mobilier as an early experiment in investment banking, but focused on its failure rather than its innovations. The Rothschilds, meanwhile, remained legendary. Their banking dynasty continued through both world wars. Their name became synonymous with wealth and financial power. Their conservative model was celebrated as wise and sustainable. Only recently have historians reassessed the Pereire's legacy and recognized their innovations. Modern investment banking, using public capital to fund industrial ventures through equity investment, is exactly what the Pereire's pioneered. They were right about the future of finance. They just didn't survive to see that future arrive. Their tragedy wasn't being wrong. It was being right too early and executing poorly. They built an empire that collapsed. But the empire's ruins became the foundation for everything that followed. Walk into any modern investment bank, Goldman Sachs, Morgan Stanley, J.P. Morgan, and you're walking into an institution that operates on principles the Pereire brothers invented: raising capital from public investors, taking equity stakes in companies, profiting from growth rather than interest, underwriting securities offerings, facilitating mergers and acquisitions. Every single one of these practices traces back to the Crédit Mobilier. Yet if you ask finance professionals who invented investment banking, most would struggle to name the Pereires. If they mention 19th century banking innovators, they'd probably cite J.P. Morgan or the Rothschilds. The Pereire brothers, despite creating the entire model, have been erased from popular financial history. This historical amnesia isn't accidental. It reflects how failure obscures innovation and how establishment narratives suppress alternative voices. The Pereires failed catastrophically. Therefore, the thinking goes, their ideas must have been wrong. But separating the Pereire's execution failures from their conceptual innovations reveals a different story. Their ideas were revolutionary and ultimately correct. Their execution was flawed, particularly regarding leverage and risk management. Understanding the distinction is crucial for understanding modern finance. Let me trace exactly how Pereire innovations became standard financial practice. First, the core concept of investment banking. Before the Crédit Mobilier, banks lent money and charged interest. They were intermediaries between savers and borrowers. They made money from the interest rate spread. This was the Rothschild model: lend to governments and wealthy individuals, charge interest, avoid risk. The Pereires revolutionized this by making banks investors rather than lenders. The Crédit Mobilier didn't lend money to railway companies. It formed railway companies, invested capital, and owned equity. When railways became profitable, the bank profited from dividends and share price appreciation. This was fundamentally different from traditional banking. It aligned the bank's interests with the companies it financed. It also exposed the bank to greater risk. If companies failed, the bank lost capital, not just interest income. Modern investment banks operate exactly this way. When Goldman Sachs finances a startup, it often takes equity stakes. When Morgan Stanley underwrites an IPO, it buys shares and resells them to investors, profiting from the spread. The model is pure Pereire. Second, democratizing investment. Before the Crédit Mobilier, major investments were accessible only to wealthy aristocrats and banking families. If you wanted to invest in railways or industrial ventures, you needed connections and capital that ordinary people lacked. The Pereires changed this by selling Crédit Mobilier shares to the middle class. A Parisian shopkeeper could buy shares for 5,000 francs. A doctor could invest savings. A clerk could become an investor. This democratization had profound social implications. It meant middle-class families could build wealth through investment, not just through saving or property ownership. It created a new investor class that would shape capitalism for the next century. Modern mutual funds, index funds, and retail brokerage accounts all descend from this Pereire innovation. The idea that ordinary people should be able to invest in securities markets was revolutionary in 1852. Today, it's foundational to global capitalism. Third, using public markets to finance infrastructure. Before the Crédit Mobilier, infrastructure projects were financed through government debt or private fortunes. A king would borrow money to build a canal. An aristocrat would use family wealth to construct a road. The Pereires showed that infrastructure could be financed through public securities markets. Sell bonds or shares to thousands of investors. Use that capital to build railways, gas systems, urban developments. Repay investors from the revenue generated. This model transformed infrastructure finance globally. The United States used it to build transcontinental railways. England used it to expand colonial infrastructure. Japan used it to industrialize after the Meiji Restoration. Every modern infrastructure bond, every municipal security, every public-private partnership traces back to the Crédit Mobilier's model of using market capital to fund public goods. Fourth, vertical integration of industries. The Pereires didn't just finance railways. They owned the trains, the tracks, the stations, and the hotels passengers stayed in. They controlled gas companies that lit railway stations. They owned steamship lines that connected to railway terminals. This vertical integration created efficiencies and market power. A traveler could book a Pereire railway ticket, stay at a Pereire hotel, and travel onward on a Pereire steamship. The integrated system generated more profit than separate companies would have. Modern conglomerates use the same logic. Amazon owns retail, cloud computing, logistics, and streaming. Google owns search, advertising, cloud services, and hardware. The Pereire vision of integrated industrial empires has become standard corporate strategy. Fifth, using financial engineering to grow rapidly. The Crédit Mobilier pioneered techniques that modern finance uses constantly. Leveraging balance sheets, using shares as collateral for loans, paying dividends to maintain share prices, issuing new securities to fund acquisitions. These techniques are now standard. Every MBA learns them, every CFO uses them. But they were invented by the Pereires in the 1850s and 1860s, testing the boundaries of what banks could do with financial instruments. Admittedly, the Pereires used these techniques recklessly. They over-leveraged. They paid dividends they couldn't afford. They used their own shares as collateral excessively. Their execution was disastrous, but the techniques themselves weren't wrong. Used carefully with appropriate risk management, they're powerful tools for growth. Modern finance has refined them, but the Pereires invented them. So why are the Pereires forgotten while the Rothschilds are legendary? Several reasons, all interconnected. First, the Pereires failed. History celebrates winners. The Rothschilds accumulated wealth across multiple generations. Their bank survived wars, revolutions, and economic crises. That longevity creates prestige. The Crédit Mobilier collapsed after 15 years. Failure erases legacy. Nobody wants to study failed financiers when successful ones are available as models. Second, the Rothschilds controlled the narrative. They had influence over newspapers, politicians, and historians. They could shape how their story was told. The Rothschild biography became the story of brilliant, conservative banking succeeding through wisdom and caution. The Pereires lacked that narrative control. After their collapse, they couldn't respond to critics effectively. Their version of events, that they'd been destroyed by conspiracy rather than incompetence, sounded like excuse-making. Third, anti-Semitism complicated the Pereire's legacy. As Sephardic Jews competing against Ashkenazi Rothschilds, the Pereires were caught in both general anti-Semitism and intra-Jewish tensions. When the Crédit Mobilier collapsed, anti-Semitic observers used it as evidence that Jews couldn't be trusted with finance. More thoughtful analysts noted that the Rothschilds were also Jewish and highly successful, which complicated the narrative. But the general association between Jewish bankers and financial manipulation hurt the Pereire's historical reputation. They were easier to dismiss as reckless speculators than to analyze as serious innovators. Fourth, French economic nationalism erased the Pereires. In the early 20th century, French historians wanted to celebrate French financial achievement, but the Crédit Mobilier's collapse was embarrassing. Better to focus on successful French institutions and ignore the failures. The Rothschilds, being international, didn't threaten French pride the same way. They could be discussed as foreign bankers whom France had wisely resisted. The Pereires, being French, were simply forgotten. Fifth, Anglo-American finance dominated 20th century financial history. English and American investment banks developed after the Pereires, but became more powerful globally. When financial historians wrote about investment banking's origins, they naturally focused on institutions in their own countries. J.P. Morgan became the celebrated father of investment banking in American narratives. English merchant banks like Barings got credit in British histories. The Pereires, being French and failed, simply didn't fit the story being told. But recent historical scholarship has begun correcting this erasure. Economic historians studying 19th century finance have recognized the Pereire's innovations and distinguished them from execution failures. The definitive work is Rondeau Cameron's France and the Economic Development of Europe, published in 1961. Cameron analyzed the Crédit Mobilier in detail and argued it was the most important innovation in financial institutions in the 19th century. Cameron showed that the Crédit Mobilier model was copied across Europe. The Austrian Credit Anstalt, the German Darmstädter Bank, the Spanish Credito Mobiliario, all were direct copies of the Pereire innovation. These banks financed European industrialization. They funded railways, steel mills, chemical plants, and electrical companies. They transformed agricultural economies into industrial powers, and they succeeded largely because they learned from the Crédit Mobilier's mistakes. They maintained higher capital ratios. They avoided excessive leverage. They diversified more carefully. They didn't overextend into politically risky ventures like Mexico. The Austrian Credit Anstalt, for example, operated for over 70 years using the Crédit Mobilier model. It financed the Austro-Hungarian Empire's industrialization. It survived multiple wars and political upheavals. It only failed in 1931 during the Great Depression, 60 years after the Crédit Mobilier collapsed. Similarly, German investment banks using Pereire methods financed Germany's emergence as an industrial superpower. By 1900, Germany rivaled England economically. Much of that success came from banks mobilizing capital for industry, exactly as the Pereires had envisioned. Even in France, after decades of conservative banking following the Crédit Mobilier trauma, investment banks eventually emerged. The Banque de Paris et des Pays-Bas, founded in 1872, used Crédit Mobilier methods modified for greater safety. It became one of Europe's most successful banks. So the model worked. It worked everywhere it was implemented, with reasonable risk management. The Pereire's vision was correct. Their tragedy was proving the concept before understanding how to execute it safely. They were pioneers who died in the wilderness, but their maps guided everyone who followed. The comparison to modern financial crises is instructive. The 2008 financial crisis resulted from excessive leverage, poor risk management, and misaligned incentives, exactly the problems that destroyed the Crédit Mobilier. Investment banks in 2008 had leverage ratios exceeding 30 to 1. They borrowed $30 for every dollar of capital. When asset prices fell, they couldn't meet obligations. They faced the same cascade of creditor demands and asset fire sales that killed the Crédit Mobilier. The Pereires would have recognized 2008 intimately. It was their crisis replayed with mortgage-backed securities instead of railway shares. Modern banking regulations, capital requirements, leverage limits, stress testing are designed to prevent Crédit Mobilier-style collapses. Regulators learned, over 150 years, that the Pereire model works but requires guardrails. Those guardrails didn't exist in 1867. The Pereires operated in an unregulated environment where banks could leverage infinitely and invest in anything. Their collapse proved that freedom was dangerous, but modern finance kept the Pereire innovations while adding safety mechanisms. Investment banking, democratized investment, infrastructure finance through securities markets, all survived. They just became more carefully regulated. The Pereire's personal tragedy was complete, but their intellectual legacy was vindicated. Every pension fund investing retirement savings in corporate stocks is implementing Pereire democratization. Every investment bank taking equity stakes in startups is using Pereire methods. Every infrastructure project financed through bonds is following the Pereire model. The brothers died believing they'd failed. They'd lost everything. Their reputation was destroyed. Their bank was liquidated. Their innovations were blamed for economic harm, but they'd actually succeeded in changing finance permanently. They just didn't live long enough to see the change take hold. In Bordeaux, where the Pereire brothers were born, there's a street named Rue Pereire. Most people walking down it don't know who the Pereires were. If asked, they might guess the street was named for a local official or minor historical figure. The street sign doesn't explain that the Pereires invented investment banking, built thousands of miles of railway, transformed Paris's landscape, and created financial innovations that shaped capitalism for 150 years. That anonymity is perhaps fitting. The Pereires spent their lives trying to replace aristocratic privilege with middle-class opportunity. They wanted finance to serve ordinary people, not just the wealthy elite. They failed personally, but succeeded institutionally. Modern finance is more democratic, more innovative, and more focused on economic growth than the aristocratic banking system they challenged. The Rothschilds won the banking war. But the Pereires won the argument about what banking should become. That's a legacy worth remembering, even if history forgot their names. So we've seen how two brothers from Bordeaux challenged Europe's most powerful banking dynasty and nearly won. How they invented investment banking, democratized finance, and built an empire worth billions. And how they lost everything through overreach, bad timing, and relentless opposition from the Rothschilds. The Pereire story defies simple moral categorization. They were brilliant innovators who changed finance permanently. They were also reckless operators who destroyed thousands of investors' savings. Both things are simultaneously true. You can't separate the innovation from recklessness. The same ambition that drove them to invent new financial models also drove them to over-leverage catastrophically. The same vision that built 3,000 miles of railway also led them to invest 50 million francs in Mexican disasters. The real lesson here isn't that innovation is dangerous or that conservative banking is always right. The lesson is that innovation without risk management is explosive, and risk management without innovation is stagnant. The Rothschilds understood risk perfectly but resisted innovation. They maintained their fortune through caution, but slowed European industrial development. The Pereires understood innovation perfectly but ignored risk. They accelerated development but destroyed themselves in the process. Modern finance, at its best, tries to balance both. Innovate aggressively, but manage risk carefully. Use leverage, but maintain capital cushions. Take equity stakes but diversify holdings. Push boundaries but recognize limits. When you step back and look at the full picture, The Pereire-Rothschild rivalry was really a debate about what capitalism should be. Should it be conservative and aristocratic, serving the wealthy through safe lending? Or should it be aggressive and democratic, serving everyone through risky investment? The 20th century answered, both. Modern capitalism has conservative commercial banks that take deposits and make loans safely. It also has aggressive investment banks that take equity stakes and finance growth. The system needs both. But in the 1860s, that synthesis didn't exist. You were either a conservative Rothschild-style banker or an aggressive Pereire-style speculator. There was no middle ground, no regulatory framework to balance risk and innovation. The Pereires lost because they operated in an environment where their model couldn't survive. They needed regulations that didn't exist, risk management tools that hadn't been invented, and market understanding that would take decades to develop. They were right about the future. They just couldn't survive to reach it. The personal tragedy cuts deeper than the financial collapse. Émile and Isaac Pereire weren't cynical fraudsters. They genuinely believed they were improving society. They thought democratizing investment would help ordinary families build wealth. They believed railways would connect nations and reduce poverty. They imagined a capitalism that served everyone, not just aristocrats. Those beliefs weren't foolish. They were idealistic and partially correct. Investment democratization did eventually help middle-class families. Railways did transform economies. Capitalism did become more inclusive over time. But the Pereiras didn't benefit from any of it. They died marginalized, blamed for financial disaster, their innovations attributed to others who implemented them more carefully. Meanwhile, James de Rothschild died wealthy and honored, having defeated competitors and preserved his dynasty's power. By conventional measures, Rothschild won completely. But history is longer than one lifetime. The Rothschild model of aristocratic family banking is mostly extinct now. Modern Rothschild descendants work in finance, but don't dominate it the way James did. The conservative private banking system he defended has been replaced by exactly the kind of public, investment-focused system the Pereiras created. The Pereiras lost the battle but won the war. It just took a century for the victory to become apparent, whether we like it or not. Modern finance is built on Pereire innovations wrapped in Rothschild-style risk management. Investment banks use Pereire methods constrained by Rothschild caution. The synthesis that destroyed neither pioneer has become the foundation of global capitalism. That synthesis emerged through painful experience. The Crédit Mobilier collapse taught financiers what not to do. Subsequent crises, 1873, 1893, 1929, 2008, reinforced those lessons. Each crisis revealed how leverage, speculation, and poor risk management could destroy even brilliant innovations. Modern banking regulations exist because the Pereiras proved that unregulated financial innovation is catastrophically dangerous. Capital requirements exist because the Crédit Mobilier showed what happens when banks have no cushion. Stress tests exist because financial empires can collapse in weeks if conditions shift. The Pereiras paid for those lessons with their fortunes, reputations, and legacies. Everyone after them benefited from their expensive education. So the question remains, were the Pereire brothers visionary geniuses destroyed by jealous competitors, or were they reckless gamblers who deserved their fate? The answer is both. They were visionaries who saw the future of finance correctly. They were also reckless gamblers who managed risk terribly. Their vision was brilliant. Their execution was disastrous. Finance history loves to create heroes and villains. The Rothschilds are either brilliant conservative bankers or monopolistic oppressors, depending on your perspective. The Pereiras are either innovative martyrs or reckless speculators. The truth is, everyone was flawed. Rothschild's methods were safe but limiting. The Pereiras' methods were innovative but dangerous. Neither approach was purely right or wrong. Modern finance, having learned from both, tries to extract the best elements of each while avoiding their worst failures. We use Pereire innovation constrained by Rothschild caution, creating a synthesis neither pioneer achieved alone. That synthesis is their shared legacy. Even though only one name, Rothschild, survived in popular memory. Perhaps that's the final lesson. Financial success and historical legacy aren't the same thing. You can win completely and be forgotten. You can lose catastrophically and change the world. The Pereire brothers changed the world. They just didn't survive to see it.